Alright, now we got time frames to use. So the first time frame that I would always recommend you set your chart at, obviously you could do 1 month, but my one will start from 1 week. So that's the overall view of the market. That's the current trend, where the market's going, whether it's bullish or whether it's bearish. Then we've got the 4 hour slash the 1 hour. That's up to you depending on how you wanna, assess your ranges and get in. But I would advise your next drop down will be the 4 hour. So that's more of the current trend. That's where exactly the power is in the market. Because on the 1 week, you can see that we're going down, but on the 4 hour, what you can see is that there's a quick, strong bull run. So what you're gonna do now is if you see there's a strong bull run in the 4 hour, gonna drop down to your 15 minute. You're gonna see on your 15 minute, is there a zone that's being tapped, about to be tapped, or a zone that's been tapped and retested, and we can trade off. And then on your 5 minute, you're then gonna wait for a perfect entry on your 5 minute, and then you'll get in. You plan to get in exactly. So use your 5 minute as your entry. Use your 15 minute to know exactly what price is doing. Use your 4 hour to know who's basically in power, so the current trend, and use your 1 week to map out the key levels and to know the overall power, who's in power. So is it a bullish market? Is it a bearish market overall? So now what we're gonna do is go on the charts, and I'm gonna show you exactly how to mark out um your, what's it called, your trade, basically your drop down analyst. This is what I'm going to be showing you. So let's zoom into the market where it is right now currently. As you can see here, there's the high. You can use a box if you want to use a box, but I'm just trying to show you exactly what these zones are. So as you see here, we've got a high, we've got a low. Boom. That's two key levels. That's the top and the bottom. Now what you're going to do now, you've seen it on the weekly. Now what you're going to do is drop down to the 4 hour. Zoom out a little bit so you can see properly. So as you can see on the 4 hour, we've got the high that's rejected, and you can see that the trend is dropping. But on the 1 week, what did you see? For a while now, the trend is going up. But on the 4 hour, the overall trend is dropping. Like I said, the weekly will show you exactly what's going on in the overall market. The 4 hour will show you what the current trend is. So now that we've got this trend going all the way down, you now want to say, okay, cool. I'm not doing a 4 hour trade, so I need to now know exactly where I'm going to mark at next. So now the next level we have on the 4 hour before we reach that bottom of the weekly is here. As you can already see, it's rejected it once. It's rejected it once, it's rejected it twice. We've got a level here that is respected, sorry. And then cool. So now we've got these two levels. Of course, you can mark out more levels. You've got this level that most likely will come in, but you don't have. There's no market research for that. So what you should be expecting if you're trying to go over the trend is it for it to bounce underneath this, retest this, and go down to that weekly. So what would happen if the market was already doing that? You will drop down to the 15. And as you can see on the 15, we're not currently at this zone. So what needs to happen now is it for the market to come down, hopefully push past this, bounce back up, test off this, and turn that now into a resistance level and push back down rather than the support. But because we don't have that now, what are you going to do? You're going to mark this level that we have on the 4 hour as the 15. As a 15, you're going to mark this as your POI, on your 15. So what you're expecting is for the market to come down and see what happens when it reacts. Once you get that reaction on your 15 minute, you will know exactly what to do, and you'll drop down to your 5 minute. Once you see what happens on your 5 minute, once you get rejection on your 15 or a breakthrough on your 15, you'll drop down to your 5, and that's exactly when you place your trade, you place your stop loss. and you hope for the best. So let's say if the market does respect that level rather than breaking through it and touching a new level, you would have, as you can see, what I'm going to quickly show you is you've got levels of inducement here. So the market's going to break past this, and let's say this is the order block. As you can see, there's imbalance, so this needs to be filled first. So what's going to happen now is go up, go up, go up, go up, down, down, keep going down, because obviously right now the market's holding. The market was coming to a close on that Friday. Push all the way down, tap here, and shoot off. If that's one of the cases, that's if it respects this line. If it doesn't respect this support, then we're going to see the opposite trade. We're going to see the market come down here, come down, tap this, possibly tap the high of it first before it taps the low, tap the high of it, tap the low of it, and then push all the way back down. And that is how you do your top-down analysis. So I'm just going to repeat that real quick. That is your weekly, your 4-hour, your 15-minute, and your 5-minute. You can add other intervals such as the 30-minute or the 1-minute, but this is how I trade, and this is how I like my students to, adapt to their markets this way.